Three, two, one.
Welcome to the 3 secrets of how to buy a home with no money down, even if you have bad credit. I am Dan Rochon, and I'm joined today with Jay Hoffman. Say hello, Jay.
Hey, everybody.
And I want to say hello to Mark Somerville as well. Mark and Jay are sponsoring Quantum Leap for Kids. I'll tell you a little bit more about that here in a moment as well. Mark, you want to say hello and introduce who you are and what you do?
Hi, everybody. I'm Mark Somerville, and I'm a counsel to ATG Title Company. I've been a real estate attorney for about 40 years, and just here to support Dan.
Thank you, Mark. I appreciate your support, and I'll say a little kudos to Mark because he is my go-to for the tough questions that sometimes I can't figure out, and I want a second opinion. That's my resource right there. It's Mark Somerville. And so thank you for your partnership, Mark. And so before I get started, I want to tell you guys about what Quantum Leap for Kids is which if you're interested, just send me a message. You can always get me, Dan@greetingsvirginia.com. We're not going to talk a lot about that tonight, but I do want you to know that is a beneficiary of some of the sponsors such as Mark and Jay. And what Quantum Leap for Kids is a program that we do for young adults that we teach 2 times every single year. And it's to help young adults to really create a vision for their life so that they can have an understanding of the possibility that they can create in the world, to help them to understand how to empower themselves by having great relationships and who to surround themselves with, and then also to allow for them to understand how they can fund that personal mission that they designed. So I'm going to share, I'm going to introduce Jay Hoffman here in just a few moments so that you can understand who he is. We're going to jump into the 3 secrets on how to buy a home with no money down. And that's brought to you by the Greetings Virginia Real Estate Sales Network. All right, so let's see here. There we go. All right, a little bit about me. So I've been in real estate sales since 2007. My name is Dan Rochon, and I've done a lot of different things in real estate sales. I've owned a rather large brokerage for 10 years of my sales career. I wrote a book called Real Estate Sales Evolution, which is the 10-step guide for consistent, predictable income that many real estate agents get and read and use that as a foundation for their business. That's just a little bit about me. Jay Hoffman, introduce yourself, please.
Everybody, my name is Jay Hoffman. I work with Movement Mortgage. I have been in the business since 1993. I took a couple years off in the early 2000s, and we're having a lot of fun spreading the word about how to get into a home. I call it a net zero transaction, and it's helping a lot of people out. And look forward to spreading the word.
Jay, so thank you for joining me. So you have a lot of experience in the mortgage industry.
Yes, I do.
If you were to share with me, I'm going to ask you 2 questions before we get started. What is one common mistake that you see others make that they could avoid?
Well, the most recent mistake I've seen, and it goes with what's going on in the environment, is they're putting their loans in deferment, whether it be their student loans or their mortgages, and it puts a little bit of a hinder on getting financing if that's going, if you have one of those in place. So that's definitely a big one.
Okay. And so I promise you 2 questions. What is one thing that you've seen that has allowed for success for somebody to get a loan, to be able to obtain financing?
There's a lot of options out there. There's a lot of opportunities that not everybody knows about. To be honest, I didn't know about them until a few years ago. And I've been doing this for a long time. So that's the missing, I think that's what's kind of misunderstood, or what needs to be spread out more is that you can actually get a home without having money, or a whole lot of money.
All right, cool. So you could actually get a home. There's a lot of programs within Virginia. We're going to talk about those here in just a bit, where you can get with no money, you can get a grant, you can get the seller to pay for the closing costs sometimes, and there's a lot of different options. So we'll talk more about that. So I'm going to go and talk to you guys about secret number one here in just a moment of the 3 secrets we're going to discuss today. And before I do that, I want to invite you to feel free to interact and have a conversation. It would be completely appropriate to treat this as a conversation rather than a presentation. So feel free to ask questions, interrupt, interject, and just have fun with it, and ask any questions that you may have. So today we're going to discuss how working with a real estate agent to be able to find the right home, about how to partner with them, how to explore the lenders, mortgages, and the loan processes. So we're going to talk first about the relationship with a real estate agent, and you're going to learn really about why.
Uh-oh. Yeah. What does that mean? What do you mean, what am I using? It's totally stopped out.
Dan, did we lose you?
All right, I think it's back.
He seems to be frozen from my
All right, we got
perspective.
to send Dan a message. Got to send him a message that he's frozen.
Okay. Hold tight. We have having some technical difficulties here. All right. It looks like maybe he left, Jay.
Okay.
So he may have known that. So he'll probably be coming back in. Hold tight, everybody.
Zoom technical difficulty.
That's right.
We are getting good at conquering these types of things.
That's for sure.
Even though I haven't done it yet.
Well, Jay, do you want to do you want to talk a little bit, just fill some time here about?
Sure, absolutely. Yes. Let me tell you my secret about buying the house. Really, what it comes down to is you getting pre-approved, and then from there, Dan would find you the house, and so the way it really works is you're going to front the money for your earnest money deposit. Okay. We ask that you use your debit card. Then you're going to use your debit card to pay for the appraisal. So what we can set up for you is at the very end, I can give you your owner's money back and then a little bit more money, up to $2,000. And also, once the loan goes through post-closing, I can get you a check in the mail for your appraisal. So that was what I was referring to as a net zero transaction. So you can literally roll, you could be paying rent, then you can move into your house, you skip a month after you close, and then you would be rolling into being a homeowner from paying rent. And I think we have Dan back now. Are you back, Dan?
And that was the most important thing that you're ever going to have to know about buying a home.
Perfect.
Good segue.
Good segue. Thank you. Thanks for filling in there for me, Jay. I appreciate that.
No problem.
Excuse my technical difficulties.
All
right.
One of my secrets, so you can go ahead and tell them yours.
Okay. Do you want to finish up? I'm happy to.
Oh, actually, your timing was perfect. I kind of told it real fast, and I can say it again here with a little more definition. But you were getting ready to tell about your secrets.
Okay. Cool. All right. So what I want to, so one of the things I want you to know is about like what's going on in the marketplace right now. So when you talk about expertise and education, so the way that a real estate agent can help you is by being able to explain to you what's going on in the marketplace in conjunction with the market conditions. So where are we right now in the real estate market in Northern Virginia is that we're at the tail end of 2 markets. And what I mean by that is if you backtrack into January of 2018, who knows what happened around that time of the world? Anybody? Bueller? Amazon had announced that they were going to have their second headquarters at the time was actually in New York as well as DC, and New York didn't want to play nice, so it ended up to be just Crystal City. And so as a result of that, for the entirety of 2018, the real estate market, the listings were pushed downward. So there was about a 35% less inventory, less homes being placed on the market from January of 2018 all the way until March of 2020. The expectation was that March of 2020 of this year, that the market at that point, that there would have been a flood of inventory, because we were expecting that all those people that did not sell during that 2-year time period would have at that point would have then said, hey, you know what, maybe it's time to sell, because prices did increase during that time period. So fast forward to March of 2020, when we had expected that the market would, at that point, the market would flood with inventory. Instead, what had happened was that the pandemic hit. So obviously nobody had expected pandemic, and so then when the pandemic came, March, April, and May of 2020, not only did the inventory go down, the buyers also went down. So remember, 2 years of inventory had gone down 35%. Now we're in March of 2020. There's another 35% of listings that go down, and proportionately 35% buyers go down at this point. So that's March, April, May of 2020. June of 2020, the buyers came out of the woodworks, but the listings did not. And so as a result of that, from June and July coming into about the middle of August, prices shot up during those 2.5 months. This is good for many sellers. And I'm going to get to where the benefit for the buyers is there in just a moment. And so the prices had increased during that time period. And then from about middle of August until now, what's happened is that the sellers evened out in the marketplace because they saw their neighbors being sold for multiple bids, et cetera. And so now the market is starting to flatten just a bit right now as we go into the winter time. Now, where the buyers benefit, Jay, where are we with interest rates today? Oh, you're on mute.
All-time low.
All-time low since when? When was the last time the interest rates have been this low?
Since the wheel was invented.
Since the wheel was invented. I think there was a biblical dude that we talked about the other day. Do we remember who that was? I probably should not say biblical dude. I may get struck by lightning by being so lackadaisical in my respect for the Bible. So there was a very prominent person from the Bible. Since the days of that individual making loans, the interest rates today are the lowest since then. You don't know who it is, do you? That's okay. I'll test your Bible knowledge. Who is it, Mark?
I haven't a clue.
Oh, fantastic. Fantastic. Good group of Catholics we are. All right. So anyways, so the interest rates right now are at an all-time low. And so what you should know as a buyer is that there's two factors that go into what you can afford. And those two factors are what make up what we call the housing affordability. So housing affordability is an equation of price as well as interest rates. And when you take the interest rates and the price, what you come up with is what they call the housing affordability index. We are at the bottom 4 of the last 45 years of affordability. So said in other ways, over the last 45 years, there's been 41 years where the dollar bought you less, and 3 years where the dollar bought you more. Right. So right now, you're in a really good spot because of the interest rates being at that low level, even though the prices went up. Because what the average buyer looks at is just the fact that the prices go up without considering in regards to the way that the interest rates offset that. So these are some of the things that a real estate agent is going to be able to help you to understand is what's going on in the market conditions, what's going on in regards to educating what your expectations should be of what's the next move in regards to the process. Real estate agents are going to be able to help you with your housing search as well as negotiation. So housing search and negotiation, one of the things that what we found, since I've been selling real estate is that consumers today have the ability to be able to have the same data that I have for the most part. Now, what the unfortunate thing is just because you have the data doesn't necessarily mean that you understand how to interpret the data. And so a really good real estate agent would allow for you to understand, here's how you interpret the data. Because just like I explained to you in regards to housing affordability, there's a lot of things that are just not easily seen or understood as you go through the real estate process. And that's what I hope to be able to do today as part of one of the secrets is showing you here's how you can actually, here's the way that the process works. And we're going to definitely get into the specific hacks of how you can, of how you get with no money down here. So secret number one, how do you find an agent? So you can find an agent through the internet, through a local company such as greetingsvirginia.com, through word of mouth, friends, coworkers, or family. These are some of the ways that I recommend that you consider to be able to find a real estate agent, because when you find that agent, the reality of it is just like any other profession. There's a lot of people in any profession that are maybe not as skilled as others. I'm certainly not being derogatory to any individual within my own industry. Yet, just if you go out there and say if you're building a house, there's probably a laborer that's going to take more care, that's going to have more skill, more knowledge about the tricks of the trade to be able to build a house that's going to stand better, that's going to be, more a sounder foundation, and just done in a better manner. So just like every other business, real estate sales is no different. So when you're considering a real estate agent, you should make certain that you're checking his or her references. And as you check his or her references, you'll be able to find, ask to say, hey, can I talk to some of your past buyers? Who have you helped before? Can you share with me references? And you should definitely check their references. Mark, before I go on, I'm curious because you deal with a lot of real estate agents, correct?
That's correct.
How many agents do you think you've dealt with in your career? That's probably
many hundreds.
Many hundreds at least. You're probably in the thousands at least, I would think.
Probably, very likely.
You're understating when you say many hundreds. What do you see as common mistakes? I'm going to ask you two questions. One is, what's a common mistake that you see real estate agents make, maybe at closing or going through the process?
I think the biggest problem with certain agents is that it's just one of experience. Experienced agents that are full-time agents like yourself have gone through this process. They've, been through it many, many times. A lot of new agents, they maybe have not done their homework as well, or they haven't been trained as well. So they expect the attorney or somebody else to kind of do their job for them because they're really not sure what they need to do. So experience is a big factor. Being in the situation, doing that, what needs to be done for that buyer or for that seller, and doing it over and over again is going to give somebody a feeling of confidence to know that your buyer or seller is being well serviced. That's all. There's a tremendous difference in the education level of a lot of the agents that I see. You're right. Some people, they're just in it because they're bored. They need something to do. Some people, it's their profession, and they do it every single day, and they're very serious about it. So you really have to ask those questions and find out what their track record is, and what their training is, and kind of their philosophy uh, on working with your clients. There's a very big difference in the quality of agents that I'll see.
Yeah, so a vast difference in the quality of agents that you see. So then my second question for you, Mark, is what is one challenge that you may see that comes up at the closing or through the process of, the couple of days before the closing that could be avoidable if something different was done? What's something that's common that could be avoided?
It's really just planning, and trying to get all of the variables taken care of before closing. Variables are such things like walkthrough. Instead of doing a walkthrough an hour before closing, maybe you do it the day before or 2 days before, so that the problems that you might find can be fixed, so that people aren't sweating bullets at the last minute to say, okay, how can I move into that house if such and such a thing doesn't work? Well, if they did it 2 days ago, they could have got that thing fixed, so that it's going to be a smooth transition. So it's a matter of anticipating what those problems are and making sure that those problems go away before you get to closings. The typical things are walkthrough items and dealing with lender last minute, issues. So the more you can help your lender out with whatever issues they might have, the smoother it's going to be for your buyer in getting that loan on time.
This is the time that Mark and I throw spitballs at Jay.
Yeah.
I'm just teasing you, Jay. Mark, one last question. It came up to me while you're talking about. I think it'd be useful for the viewers to hear. What's the worst day that to schedule a closing in the month? Worst day of the month.
The worst day to schedule a closing is the last day of the month, and especially when the last day of the month is a Friday, because
or a holiday or New Year's or something like that, right?
Right, because I think typically, especially first-time home buyers, they don't have a lot of money, and so the agent says, well, you should close on the end of the month, because then you're only going to be paying 1 day of interest or very little interest on the new loan. And that sounds good, and it is good, and it's good advice. But realistically speaking, in this day and age, there's an awful lot of volume, and the end of the month is always the biggest volume. And so if you can schedule a closing just a day or two before the end of the month, it's going to be so much cleaner, smoother than the last day of the month. The other day of the month that's big is the 15th, because people can't calculate very well. So half a month, half a 30, well, that's 15. Okay, so let's close on the 15th. Well, the same thing. 15th, especially if 15th is a Friday, that can be a very busy day. So again, if you want a smooth transaction, every client I will talk to, I say, do not close on the last day of the month. Try to get it a couple days before that. Hey, or you do it a couple of days after that. You go the first couple of days of the month, nobody's closing as much. You say, well, you're paying more interest, but I say, yeah, you're paying more interest, but then you got a full almost 2 months before you make a mortgage payment. So there's a little bit more money up front to pay, but it all works out the same. And it'll be a lot smoother for you potentially. And there's a lot of lenders that if you close in the first month, they won't charge you interest till the end of the month. They'll give you an interest credit.
That's what I was going to say.
And it's going to be even that much smoother. So, it's just a matter of knowing that so that your client, because client's going to be stressed. They're buying a house. This is a very stressful thing. And, they say the only thing more stressful than buying a house is getting married or having a child or getting divorced. So, it's right up there. And I've had some clients that are getting married and getting, buying a house the same weekend. It's like, oh my God, you might as well do it all.
Yeah, I was just going to expand on that. Mark, thank you for sharing that about the 15th and the last day of the month, because I think those are things that the common buyer is not going to understand. And quite frankly, many agents don't understand. And so I know to avoid those days of the month, because I know that you guys are slammed. It's just knowing the inventory. And just knowing the reality of you guys doing multiple closings on the same day, how, that could, just like any other business, that could stress you. And you don't want to, as a buyer, you don't want to be in a position that you're stressed.
Well, here's
and then
another
Mark had
thing.
brought up, go ahead, Mark.
I want to bring up one other thing.
Please.
When a buyer signs a contract, there's a term in the contract that's called time is of the essence. And time is of the essence means that you have a legal responsibility to close on or before the date that you put in that contract. So if you put in on or before the 30th of the month and things get pushed off the 30th, you are technically in default on that contract. Now, your lender's going to say, I'm sorry, we're slammed, we just couldn't get it done. The lender didn't sign that contract. He's not in default. He's not going to lose his earnest money deposit. He's not going to be sued by the seller for not showing up to closing on time. And so do everybody a favor. Plan a time that the lender is going to certainly be able to get the loan done. And you're not going to have to worry about being up against the deadline that you're legally going to be responsible for being in default of a contract. And when you're buying a house for whatever it's going to be, it's a lot of money. You don't want to lose an earnest money deposit. You don't want to have people coming after you.
That's a very good point. So thank you for expanding on that as well, Mark. And I wanted to expand something that Mark has said about the, getting married, having a baby, getting divorced. Every single person that contacts me, almost 100%, has an emotional thing going on in their life. They're either getting married, they're getting divorced, they're having a baby, they're getting a job relocation, they're upsizing, they're downsizing. They are ready to move on to a smaller home, and when they're aging and their children are gone. It's always, there's an additional emotional challenge that is almost every single time that's going to be involved in the transaction, which goes back to why it's so important to make sure that you understand and that your real estate agent understands exactly, how to be able to best guide you or your referrals, to be able to be able to understand how to guide them through multiple emotional challenges, so that not only are they, that they're buying a home, but they, what is the motivation for them to do so? When you are interviewing agents, some of the smart questions that you can ask them is, may I see your license? And ask them, really interview them. How long have you been a real estate agent? And, if you're hiring them as a listing agent, I know we're not talking about listings, but if you are, what's your average days on the market and list price to sell price ratio. Ask them about how they market. Are they a full-time or part-time agent? And we've already gone over some of those things. So as a buyer, you should know, how does the real estate agent get paid? So typically there's no money that's going to come out of the pocket for the buyer. It's going to be paid from the seller. So what happens is the seller pays the listing broker, and then the listing broker then pays the agents for both the seller as well as the buyer. So your agent is going to get paid from the seller in most cases. If that's not the case, then you should be eyes wide open going into the transaction, so that you understand that they're going to be asking you for something in addition to whatever the seller is going to be offering. You have to understand that when you hire an agent, that the documents that you use are designed to protect you and your interest. And so in Virginia, they're going to ask for you to either hire an agent or not hire an agent. Put in writing that you're not going to hire an agent. And so that's going to protect you and your interest. One of the things that we do in our buyer agreements is that we actually give, we're very passionate about what we do. So we give the right for a buyer. If they're not happy with our services, fire me. It's no problem at all. It doesn't happen, yet I'm so passionate about what I do that I offer that as an opportunity, because I want to make certain that the buyer is 100% comfortable and confident in the services that we provide. Typically, most buyers are going to physically look at about 10 homes or so. And as you're going out, you're looking at those homes, you should be taking notes. In the time of of coronavirus, many of our buyers are not comfortable actually looking at homes. So that's why we offer virtual tours, and you should ask your agent if they're willing to do a virtual tour, if there's a virtual tour that exists for the home. Would you be willing to go out, take a look at it on your iPhone and show me the videos? When you are looking at homes, you should be visually inspecting each item of the home as you go through, right? So we're looking at the big rocks. Remember that when we get the home inspection, we're going to really be going through and making certain that that all those big rocks are well equipped, and that if there is something that's a damage or needs to be repaired, you're going to at least know that it's damaged and have the opportunity to get it fixed, or have the opportunity to maybe negotiate for the sellers to pay towards some of the repairs, or you could even accept it in the as-is condition. Yet what we want to make certain is that you have an understanding of exactly what it is that you're buying. So when you're negotiating, your agent should be able to consider some of these things here. So when I'm negotiating for a buyer, one of the first things that I do is I say, how long has this been on the market? I want to know how long the property's been on the market, because if it's been on for I was talking to a buyer earlier today in a market where the homes are being sold in one day. That property's been on the market, that home's been on the market for 17 days. Now, 17 days is not a very long period of time, yet in that marketplace, I know it's overpriced. I know it's overpriced because homes are being sold there in one day. It's a very, very hot market. So if our buyer tomorrow makes a decision to move forward and write an offer that gets accepted, I'm going to be able to share with him, which I've already done actually, about, hey, here's how many days on the market that in this marketplace homes are staying. And so that's going to be a piece of what we're going to want to consider as we're negotiating. We're also going to want to understand how long have they owned the home. So for example, if they've owned the home for 35 years, say they're then perhaps where would they be moving to? So just sort of like doing a little bit of I call it a little bit of sleuthing by taking contextual clues and then putting them together so that you can understand what the motivation is of the sellers. And that's my responsibility when I'm representing the buyers, is to figure that out so that I can, best represent the buyer's interests. First thing that I'm going to do is when you want to write an offer that's going to get accepted, I'm going to give the listing agent a phone call. I'm going to find out what is it that's most important to that seller. It may not be price. It may be timing, particularly as we go towards the end of the year. I was talking to a seller not too long ago, and she, for tax reasons, wants to make certain that she sells in 2020. We're getting up almost to 2 months left in the year. So she is going to be more motivated. Now, I'm going to be representing her, so I won't tell you who she is because you wouldn't want to, because I am representing her. But let's say if another agent was representing you as a buyer in this transaction and you find out that she has a motivation to sell before the end of the year, that could be to your advantage. Now, by the way, they're not going to find that out from me, right? But a weaker agent very well may be able to share something like that with me, and then I'm going to be able to position you to say, hey, look, they want to sell by by December 31st, and say we get up to say November 22nd, and they still haven't sold it, they're going to start getting pretty anxious to sell, and that may be in your benefit as a buyer. So these are some of the things that you're going to want to consider. Some of the contingencies that are going to be met are going to be a home inspection, appraisal, and a home loan. So that's going to be a part of the process. And this right here is the process of what happens. So what happens in the transaction is that you are going to write an offer. That offer is going to be submitted by your agent to another agent that represents the seller. Seller's going to share it with their client. When you write the offer, you're their offerer, they're their offeree, so they're receiving the offer. If the seller makes any change in that contract, or the offer whatsoever, it's not a contract yet, even if it's like we're going to settle on the 15th instead of the 14th, everything else remains the same. Now that's going to be known as a counteroffer, but in reality, what happens is they rejected your offer. Now they became the new offeror. So now they're their offerer and you're the offeree. And now essentially what in reality has happened is that they're making you an offer. Okay, the seller at that point is making a new offer. And what that means is that the original offer from you to them is no longer valid at that point. That's important to know because when you're going back and forth in the negotiation, what you should realize is that anything that you presented before that is no longer valid. So you can't revert back to an offer that was previous in regards to the negotiation. So again, things that are really important that you should know as we go through this process. The day before closing, we heard about Mark Somerville talking about the walkthrough. A couple days before closing, you're going to want to make sure that you're bringing a checklist and you're walking through that home to be able to really truly understand, is it in the same condition as when we wrote the offer, or is it in the same condition after the home negotiation repairs were negotiated and repaired? And so that's what's going to happen the day before. The next day, guess what? You're going to show up at Mark Somerville's desk, and Mark's going to review a whole bunch of numbers with you and make sure that you have all your questions answered about the numbers. And of course, your agent and your lender is going to be consulting you through that before you get to the title company's office door as well. Mark or Jay, anything to add to what I just shared with you there?
Really, no. That was well put as far as the there's a lot of tactics depending on where you're trying to buy the property, and like you said, knowing the market, because some markets you can sit back and kind of play it slow. Other markets, you better jump on it or you're going to lose it. And you'll find a lot of times it's very tough to pull that trigger, I guess, as a first-time home buyer, not knowing what you're doing, because it's a lot of money. And he's like, ooh, geez, I don't know if I want to spend that much money or not. But if you delay, I guarantee it will be gone. And so the best thing for a new buyer, honestly, is to know these things ahead of time, is to get your loan information pat so that you know exactly what you can qualify for, and talk to the agent and find out, the neighborhoods and so forth that you want to move into so that you're ready to go, so that when the one that you really want comes up and you've already talked to your lender and you know what you can qualify for, you know you can positively make an offer or not. And, that's the biggest thing that you can do, is be proactive and to try to have that information as much as possible beforehand so that you're not going to have to be worried about it after the fact. You're going to know when you make an offer that you have a chance to get that contract or not. And if somebody accepts it, I can actually get approved for this loan. That's important.
Thank you for sharing that, Mark. And yeah, you are absolutely correct. And one of the things in the Northern Virginia marketplace that you should realize that there's micro pockets in Northern Virginia. So the market in Arlington could be completely different than the market in Reston or Herndon or Woodbridge. Alexandria in of itself, you've got Alexandria, Fairfax County, Alexandria City. I live in Clifton, so you've got Fairfax Station, Clifton, different than Manassas. There's all these different pockets in Northern Virginia that the market is actually different. In fact, right now, the two marketplaces in Northern Virginia that you're seeing a bit of a slowdown, or rather not a slowdown, what you're seeing is inventories increasing: Crystal City, Arlington, and Old Town Alexandria. Again, that's as a result of going back to more than 2 years ago, of when Amazon and Nasdaq, everybody kept their properties on the market. And now what we're seeing is that we're seeing an increase of inventory in those two very, very micro marketplaces. So Northern Virginia is a very unique market that you are going to really definitely have to understand, what's going on in the marketplace to decipher it. And hopefully the real estate agent can guide you through that. Okay, Mr. Jay Hoffman, I'm going to see if I can get your lovely face on the top of this. If I can't, then I can't. All right, we'll see what we can do. So Jay, as I play around here with video, tell us what you got for what can you share with us about the loan process?
As far as the loan process is concerned, like it's my favorite kind of loan candidate is somebody that does what Dan just said, gets pre-approved up front, is able to supply the things, the normal things that we ask for, W-2s, pay stubs, tax returns, and, kind of do it in a timely fashion. A lot of times to win your contracts, you got to go fast. So in those situations, if you're trying to go fast and you submitted a contract to go fast, one of the important ways to get to the finish line is to be able to be punctual about answering the phone calls from the lender, giving them the documents that they need. So being punctual with that is very helpful to getting everything done in time. So getting approved up front is big. If you're a salaried employee, it's a lot easier to determine your income. If you have your own business, or if you're an hourly employee, it will start with an hourly employee. We typically will want to see a verification of employment that will average his amount of hours, so we can know exactly what the income number is, and we don't want to overestimate or overbuy there. And then with self-employed, we have to do an income analysis with tax returns. They don't take the self-employed is actually faster than the hourly, but those take a little bit more time than if the customer is guaranteed a salary. Also with VHDA, or I'm sorry, Virginia Housing now, if you're getting a Virginia Housing loan, you got to be careful with your deposits, because they look at every one of your deposits, small, $10, $15, and you gotta source them.
Hey, real quick, what is Virginia? Excuse me for interrupting. What is Virginia Housing? Can you explain that to us?
Absolutely, yes. Virginia Housing is the bond company for Virginia that helps people get affordable housing. And the way they do this is through that program I was telling you about when Dan tapped out. They're able to help you with down payment assistance. They can give you the money for your down payment, and they can also give you money to pay some, most, or all of your closing costs. So that's Virginia Housing.
Okay. All right. So thank you for sharing that. And I think we can expand on that here a little bit more. So tell us about the three types of lenders and the questions that a consumer should be asking, a buyer should be asking.
Different types of lenders, like what I would look for if I were buying a house for the first time right now, I would look for somebody that works beyond 5 p.m. I would look for somebody that's available also on the weekends. A lot of the negotiations go on after 5 o'clock into the evening, Saturdays, Sundays. So try and find somebody that is available at those times. Try also to find somebody that's not too busy. Sometimes, that'll get in the way of getting a quick loan, a loan done quickly. Try and find somebody that has experience. Also, I don't like to talk bad about the competition, but the banks and the credit unions, they take at least 45 days. And most agents that I've talked to, when they see an offer from a bank, a big bank or a credit union, the offer goes to the bottom.
Can I talk bad about the competition?
Yes, sure.
Okay, I'm just asking.
Yeah, but so you might not want to go with the bank, because the agents and the sellers don't like the banks. They don't like dealing with them. So that would be another thing I would suggest. Local is a good thing. I would, broker transactions take a little bit longer. If you can find a lender that can close and fund in their own name, and that they actually sell their loans to Fannie Mae and Freddie Mac direct, that could be less expensive for you, less overlays, less fees that they have to pass on to you.
Let me ask you, what is a mortgage lender? What's the difference between a mortgage lender, a mortgage broker, and a correspondence lender? What's the difference between the three?
The mortgage lender, I think, is the most powerful. They're typically able to close and fund in their own name, and then the loan would go into the secondary market. A broker never closes in their own name. They always close in whatever correspondent they're selling the loan to. When you have that, there can be a lot of back and forth at the very end, and it can cause delays, and it's hard to get a settlement done quickly. Going through that process, the banks, we know about banks. They're Bank of America, Wells Fargo, and what I tell people mostly, and this is the truth, what the banks want most is your deposits. They want that more than your mortgage. And I don't know how to prove that to you, but that really is what they want. And their mortgage takes a less priority than getting their deposits. So that's kind of my analysis of the difference between the three.
What types of different loans are there available? You talked about the Virginia Housing Loan, which has the grant program, and that's really the way for somebody to get in with no money down. That combined with getting a subsidy, meaning getting the seller to pay towards the closing costs. What types of loans are there besides that?
Well, the way I like to break it down is there's two different brackets. There's a conventional loan, and then there's a government loan. I'll start talking about government first. Government is FHA and VA. VA is kind of separate. When you're just doing a regular loan, you're either going to get a conventional loan or an FHA loan, pretty much. The reason why conventional loans are so much better than FHA loans is because you get credit for your entire down payment. FHA loan, they're going to require you to make a minimum investment of 3.5%. Of that, they're going to take 1.75 of it, and it goes to what they call the upfront mortgage insurance premium, and it's FHA's insurance for if you don't make your payments. Conventional does not have that. You get credit for all of your down payment. The other big difference is with the mortgage insurance piece. Your FHA mortgage insurance never goes away unless you sell or refinance. The mortgage insurance piece for the conventional loan can go away if you can show them that you have 22% equity position based on when you bought the house. It's actually 20, but when you apply for it at 20, there's hoops to jump through. Whereas if you apply for it at 22, there's less hoops, 22% equity, then you don't have to pay your mortgage insurance anymore. So that's the major difference between the two loans.
Okay. And talk to us about pre-qualification versus a pre-approval.
The pre-qualification is basically kind of a rough draft. It's getting pre-approved without supplying backup documentation. So somebody could call me up and say, "Hey Jay, I make $100,000 a year. I got a car payment and a credit card of $20,000 with a $400 payment. My credit score is 740. What do I qualify for?" So based on that right there, I could say, okay, you're pre-qualified for this much. But if you want to do the pre-approval, then I'm going to say, all right, give me 2 years W-2s, 2 months bank statements, 1 month of pay stubs, copy of your ID, and a few other things. And then I'll match those up and make sure it's what he says it is on the application. Then I'll pull his credit, attach the credit score, verify the debts that he has, and it's a lot more formal.
We had that conversation about 4 hours ago with a gentleman that is entering into the pre-qualification range. He wasn't exactly interested to we'll see where he goes, but he had a discomfort with coming with some of that information that you were asking for Jay. So he's going to be a less qualified buyer at this point. And as we work with him through the process and get him more comfortable with the process, we certainly need him to be pre-approved before we get seriously into taking a look at home. So, because what we don't want is we don't want to take this gentleman that I'm referring to, who really just wasn't comfortable sharing, any documentation, which is fine. I completely respect that. Yet, when we go out, we start looking at homes. If we were to write an offer, we're not going to have a competitive offer as though if we were actually pre-approved. So that's the benefit of pre-approval. Would you agree with that, Jay?
Yes, definitely.
All right. All right, I think you let's see, you hit up VA conventional. Tell us about USDA loans. I know that there's not a lot of USDA loans out there, but tell us like where they would qualify for a USDA loan and what is a USDA loan?
USDA falls under the government window of loans. It is property specific. So literally, when I have a USDA inquiry, I go to the website, I type the address in, and I hit enter, and it says yes or no, and it'll show me where the property is and how close it is to the boundary of USDA. It's 100% financing loan with a funding fee, and I believe there is mortgage insurance on them. I haven't closed one of those in a while, but it's more for like farming areas or property specific areas that are pretty much like Stafford.
Yeah, I would say in our area, it's going to be West 66 or South 95.
Right.
Right. For something to qualify. Now, they're good loans. There is a challenge with those loans is that they take a lot longer to close than a normal loan.
Right now.
Because they have, yeah. I'm sorry. What was that, Jay?
Right now, especially, we're not allowed to do, their USDA is completely backed up right now. It's not
sure.
Lenders' fault, but we're on a minimum 45-day lock on USDAs, and I'm like 20 to 25 on the rest. So
yeah, because don't they have to go through like a qualification through the lender as well as the government? Isn't there like a double qualification with them?
Yeah, I believe so. Yes.
Yeah. So they take a much longer period of time. They are good loans, but there's not a lot of properties that are available for them. Talk to us about the loan estimate, if you could.
Absolutely. So basically, there are 6 pieces. As a result of the crash of 2008, the government kind of redid a lot of the forms and redid a lot of the process. So one of the major things they did was once 6 key pieces of information are entered onto a loan application, RESPA is then triggered. Okay, so it's a day thing. So once RESPA is triggered, you have 3 days to disclose terms to the customer. Okay, and
hold on one second. RESPA, what's RESPA? Many people won't know what that is.
RESPA is a governing body that makes sure that people in the industry are doing things the right way.
Right.
Real Estate Settlement Procedures Act.
What's that?
The Real Estate Settlement Procedures Act.
Exactly.
Leave it for the attorney to show off.
I'm glad you didn't ask me that, Dan.
Thank you, Mark. It governs that we're not being unethical in the way that the way that Jay and Mark and myself the way that we deal with each other.
Right, and it's a serious body they're very serious about what they do. Let's just say that. So once RESPA is triggered with the 6 key pieces of information on the application, the lender will then they have to by law send terms to the customer. Okay. Now these terms used to be expressed in what was called the good faith estimate before 2008. Now it's called the loan estimate, and the loan estimate is more. It's more uniform. It's harder to hide fees. Like you could hide things with the good faith estimate before. It's pretty hard to hide things in the loan estimate. It helps you. What their goal is for you to be able to get 2 loan estimates and put them next to each other and see the difference without having to do massive calculus. So that's the loan estimate. And what happens? So to tie, you get that at the beginning, and then at the end, 3 days prior to closing, you get what's called a initial closing disclosure. Okay, now what I like to tell people about this is there's a page where you can go to on this form where it'll show you what all the numbers were in the beginning, how they were disclosed to you, and then how all the numbers are now, and then it tells you like the exact difference. So you could see what came out more expensive, what came out less expensive, and then it tells you where you can go to see what fees went up, what fees went down. So it's a good way to monitor your loan officer to make sure that they're delivering on their upfront promise.
Awesome. All right. Thank you for explaining the loan estimate to us. And how can a consumer protect themselves against predatory lending?
Well, it's kind of a good question. So you're going to get hit with a lot of solicitations because the credit bureau is going to sell your information to third-party solicitors. So you're going to get hit in the mail. You're going to get hit by phone. if you're serious about wanting to do any of these things that you're getting solicited for, contact your loan officer, contact your agent, contact your settlement attorney to see if these are viable options for you. A lot of times they're trying to sell you extra insurance. They're trying to, solicit you for a refinance or, whatever it may be. But your information will definitely be sold. And from there, also, maybe you want to get on a do not call list or do not mail list, and that could minimize the amount of inquiries.
Yeah, and if you have any questions, that's again the reason why you want to select a good team, or you want to select a good real estate agent, and because that real estate agent is going to be able to provide those resources of people, hopefully that they've worked with many, many, many times before, and help to keep you protected.
Dan,
all right,
Dan, 1 second.
Go ahead.
Interject one thing. To first-time buyers, I want you all to listen to this. Try to deal when you're getting a loan with a local company if you can help it. It's always good to have somebody that you have sat down with, looked across the table, they promised you something, if they're going to be there. If that loan doesn't go through, you go back to their office and, let them know what's going on. And you can put them out of business, because you're going to tell a lot of people that guy did a bad job for me. So try to get somebody local if you can help it. I think there's a great temptation for people, especially young people, to rely on the internet. And I think you'll get a lot of quotes from the internet about great rates. Well, what I'll tell people is this: those great rates, they put out great rates because they don't have any customers. And they have to put out great rates to try to get your attention. Whether you get that rate at closing is another story. They got you in because, well, I'm promising you this rate, 1.5%. Well, you're not going to get that. The price of money is the same for every lender in the country. They all get their money from the Federal Reserve, and it all costs the same. So somebody's going to say, I can do it for a lot less. It's not possible unless they're going to lose money. They don't want to lose money. So what does that mean? That means they promise you something that they can't deliver on. And so you could be spending a lot of time and effort with a lender that you've never seen, and they've got your deposit money and they're stringing you along, and it comes to closing time and there is no documents, no approvals. And you're like, uh-oh, now what? Now what? So if you've got a local lender that you've sat across the table from, he's taken down your information, he's promised you a closing, most likely he's going to deliver that closing for you, because there's consequences to that. There's not a lot of consequences to that internet lender that you don't even know where he's from. He's promised you something because he has no customers. So he's hoping that you're going to bite. So be careful, careful, careful. The other thing is, as Jay said, big banks. Big banks, you're familiar with the big banks, but you are a very small number to that bank. And your loan means very little to them in the big picture. So try to deal with somebody that's local and does this stuff on a different level than Bank of America or Wells Fargo, because honestly, you are just a number, and they do everything centrally. So nothing is done locally. It takes a lot longer to get that loan through. So be very careful if you're looking for a loan.
I can second what Mark just shared, and if you're interested, which you're probably not interested, I can tell you story after story after story of clients that did not heed to that advice that Mark just shared, and it was a mistake. So that's what I want to share with you guys. All right, well, thank you for tuning in today or tonight or whatever time that you're watching this. I wanted to give you a chance. I know that we have some people here that may be with us, and if you have any questions, feel free to throw those out. I don't know how to operate any of these controls here. Maybe Fraser can help me. Fraser's probably sleeping somewhere. He's got himself hidden behind a fighting squirrel, like that's supposed to be
correct.
something.
That is correct, sir.
All right.
He's watching the
Well, I did open things up for questions, but I also want to say thank you very much to Dan and Jay and Mark. A great workshop. I will leave it open. Any questions from the audience?
All right. Well, thank you very much. And my contact information, if you're watching this on a replay, and I could certainly introduce you to both Mark Somerville and Jay Hoffman, yet I'm going to ask for your gentlemen's contact information here in a moment as well. You can find me at the website www.greetingsvirginia.com. And that's probably the easiest way to track me down. You'll find a lot of great consumer information on there. You are welcome, Miss Betty. And so that's www.greetingsvirginia.com. Mr. Jay Hoffman, how can a consumer get in touch with you?
Best way is probably through my cell phone, 703-582-7481. Or my email is movement.com. Hold on. J.Hoffman, I'm sorry, jay.hoffman@movement.com.
I will never do one of these in the evening ever again. We forget our email address. Mark, how can somebody get in touch? And if you're a real estate agent, you're looking for a great title guy, Mark's your guy. And if you're looking for a great lender, Jay's someone you should talk to as well. Mark, how can somebody get in touch with you?
The easiest way to get a hold of me is email, and my email is mark, M-A-R-K, @atgtitle.com. I'm counsel to ATG Title. That is by far the easiest way to get a hold of me. You can go to ATG's website, which will also tell you a lot of information. We do a lot of closings in DC, Maryland, Virginia. But call me. I'll be glad to go through the process with you. I won't charge you. I do it because I'm just a good guy. And I've been doing it a long time. So if you have questions about that process, just let me know. I'd be glad to go through the process with you.
Thank you, Mark. Thank you, Jay. And thank you, Fraser. Thank you, Betty. Everyone have a good night.
Yeah.
So long, Dan.
Bye-bye.